Good evening. Ira Epstein of Linn & Associates with your metal market wrap-up for this Tuesday, the 9th of February, 2021, 6:05 p.m. Central Time. So we've reopened. We're already into the Wednesday session. You're down another 10 cents in silver. Copper market's gotten up to its upper Bollinger Band. You'll see that in a little bit here. So I expect it to have some problems. And the gold market came to life. Now, what helped all the markets today was a big break in the dollar index to the downside. Another day up in the stock indices. We're sort of flat right now in the energy markets, as you can look in the bonds and the notes. As we take a look at the weekly area chart of gold, here's your 18-week moving average of closes. As long as the market stays under that, what do we have? We still have downside bias. Now, the markets are looking very hard at the lowering of COVID cases in the U.S., more vaccine coming out. The Biden administration wants to release 5% more. The market is looking at the talk of the COVID-19 relief package, what will and won't get passed. And of course, right after that, we know we're going to be talking infrastructure spending. So it's a lot of spending that's coming to the market. Will that impact the gold or not? Gold did not get the same play today that Bitcoin did. You saw Bitcoin got near $50,000 a coin today. So that's running on its own world. The hard asset play, not there. And I don't think Bitcoin, well, Bitcoin is said to be the millennials, new generations, young people's gold. I'm not convinced it is, but I'll let it go at that. It does have an asset value of some type, but it's a high-risk asset at the very least. In the daily bar chart of gold, as we take a look at the action, we've gotten a nice bounce off the low. The chart action is still a mess. That's the only professional way to describe it. You have a higher high, a lower low. You've given a bounce in the market. You came back to what I call that line in the sand. I was talking to you about it yesterday. This is where markets fight a battle. Should the market take out today's low and close lower on the day, you would reinstate the idea of lower highs, lower lows, and give the bears some more fodder until the market would take out 1849.5. Conversely, take out the 1849.5 and keep going. You would have resistance at 1872.30, which is the 200-day moving average, and the 100. So you've got these zones of resistance. Where's the Bollinger Bands? The Bollinger Band has tied itself, as you can see, to the 100-day average. So it's right up here. That's where it's trading at this point in time. I don't like to put the 200 on everything because there's so many lines on this chart for you, it's hard to understand. In the morning, I do them all where I think they're appropriate on my subscriber video because I'm at least they're able to talk, not as fast as I'm going here, and walk you through step by step what I'm seeing in the charts with the recommendations. Here we're describing the event. So, should you decide to propel up, I think you'd have a very difficult time at 1882. More likely, you're going to fight a battle right in this zone. Momentum has gotten away from being oversold. It's come up, sort of flattening, but still I'll give it the benefit of a little pointing higher. The bias is down and no trend. Still not an awful lot on that chart. When we look at the gold-silver ratio, you are still under the 18-day moving average of closes on it, which means what? Silver still has an edge over the gold. Now, it doesn't have to be making money against it every day, but overall, until you close over 69.87, that's what you've done. You've been correcting. Remember, this was near 130 last year. Wow. In the silver, we held nicely 3-4 days ago the 18-day average of closes. There's a reason I call the 18-day average the line in the sand. It is the neutral zone on a chart. It's the DMZ zone. It's where markets go to when they're way up and they want to come back and try to figure out what to do, or way down and they want to figure out what to do. Not uncommon. Go look at it yourself. You'll see what I'm saying. Sometimes you bounce around it. Sometimes you just pause at it and then it does its own thing again. But it's like a neutral point. I always thought of it like a pinball machine. Press the reset button, and that's what I teach in the charting course because it activates lines that might have been resistance or support, and they're active again once you hit that number. That's what it does. It keeps reacting, acting to be the number that reactivates a lot of resistance and support lines. In the copper, this is why I'm saying I'd be very cautious here. You've come down, you challenged the lower band, you're way up at the upper band. On the 12th, formally, the Lunar New Year begins. Markets come up nicely from 350 to 370, 2.5. That's a big rally. And, you know, do I think it can go higher? Well, I went on record yesterday saying $4 on Bloomberg's BNN TV. That can happen very easily. It won't be, I think, in the March contract, but it can be this year in another of the contracts. We'll see what happens. But I'd be careful. You're overbought. In the platinum market is staying over the upper Bollinger Band, which means it's overdone in plain English. If you were to stay up today, it'd be 3 days over. You have 2 over the number. You still have a pattern of a lower low, higher high. I'm certainly not in love with that. Where's the battleground in the palladium? 18-day average? You betcha. Take a look at how it's fighting there. Where's the other resistance? Remember what we were just talking? If gold rallied, the moving average is above it. Here's the 100-day average in that. So this market has a pattern of still lower highs and lower lows. Still very much in a bear pattern. It's fighting a battle against the 18-day average of closes. The risk to the shorts is if the market gets over 2357.50, it would give the market a pattern of higher lows and then higher highs over these two numbers. Nothing magical about being over those two numbers, but just there, and put into play wherever the Bollinger Band comes in. If it would fail from up there, then I'd look for support back at the 18-day average. But at least I can say here the bears still have some control of that market. In the dollar index, we had gotten up to the upper Bollinger Band, and I kept telling you I'm looking for this market to fail against that number. Overbought, momentum turned down. You can see it right through here, and watch out. All right, did we ever embed? No, we just got overbought. I think the pros began coming out right where my finger is. You did extend that, then you had the reversal, started declining yesterday. You know what I'm going to tell you? I think it's going to go back to that line in the sand, and we'll see what it does. We'll see where it opens tonight, but you're in that zone, as I want to call it. Now, if you took out 90.33.5 on the close, you're only 9 points away from that. If that were to occur, I would lose the bullishness in the swing line. I'd then have a higher high, lower low. I have momentum down, bias down, but nothing on this chart can turn it into a downtrend just yet. You can lose the bullishness of the swing line, but it's neutralized anyway since prices are under that 18-day average of closes. You know, I started today writing the rules for my new course on enhanced slow stochastic and Bollinger Bands. And one of the things I started writing about was using pivot points when a market's going sometimes against you. And you're looking for a zone to come out. You want to mitigate the loss because you're realizing you've lost an embedded slow stochastic reading. What do I look at? During the day, I make you a promise. If that happens early on in the day, I'm looking for zones to come out, and I'll go to this market and I'll say, okay, where am I with the slow stochastic? Where are my support and resistance zones off these 15-minute charts? Why? Because high probability is what the market's going to do at those numbers. That's the key to it. If you don't know enough about it, for free, I have a 3-part video series you can get right now. Simply go to our website under free offers, sign up for it. We'll be happy to send you everything you need to get right into it. No money. I said free, I mean free. You can call my staff. They'll set you up right away for it as well. 866-973-2077. I'll talk to you tomorrow.